Welcome to the Learning Pines YouTube. We hope this video helps.
You begin by building the spine of your bookkeeping. Create a chart of accounts listing assets, liabilities, equity, income, and expenses, then open a workbook and add sheets for transactions, chart, and monthly summary. Once done, set a transactions table with date, account, description, debit, credit, and balance columns. Make sure to format date and currency cells immediately so entries validate. This first step turns scattered receipts into structured data and lets formulas reference reliable ranges. You now record and categorize every transaction. Use an Excel table or data entry form to keep consistent rows. Enter date, account, and amounts, then apply formulas like SUMIFs to total by account and IF rules to auto-categorize recurring items. Once done, maintain a running balance formula to spot errors quickly. Make sure to reconcile monthly by matching bank statements against your transactions sheet and mark cleared items. This process keeps numbers accurate and prepares timely financial. You finish by closing the period and verifying totals. Build a monthly summary using pivot tables or SUMIFs to show balances by account and category, then compare income versus expenses and check equity movements. Once complete, lock or archive closed months by copying values into a backup sheet to prevent accidental edits. If numbers don't match, use Excel's formula auditing, trace precedents, filter negative amounts, and confirm opening balances. This final verification ensures your books are clean and ready for reporting.
Thanks for watching. Consider subscribing if we helped you.